Welcome back to the Brent Bruce Daily. We have a lot of great information for you, including some good news on the home loan interest rate front. Today is July the 21st. It is now 12:36 p.m. Central Time. So we're going to take a look at a couple of interesting topics that came out today so far. Up in the corner here, you see a little sneak peek on our home loan interest rates, giving us that green. Green is good, up 41. So things are looking good on the home loan interest rate front. So there are some reasons for this. Now, first of all, I want to make sure that you think about the fact the things that we get used to so easily and kind of get spoiled by. So, what is the standard overall historic appreciation rate for home prices? So, what is a good, healthy increase in home prices year over year over a 100-year term? Normally, that number is looked at by people in the investment community of being between 4 and 5%. So a home would normally increase in a healthy market by maybe 4%, 5% a year. Now you see dramatic ups and dramatic downs, but if you level it off, that's about what they look at when it comes to home loan appreciation. Now we have been experiencing 20% appreciation to as high as 30% appreciation in a lot of our major markets in the area. So now Zillow came out here and gave their estimates for the next 12 months from July to July of next year. What do they anticipate their appreciation rate? And they came in at 7.8%. So this is still very strong. The expectation from Zillow that home prices will go up by 7.8% is, I mean, think about it, almost double the 4% of a traditional standard market appreciation rate. So when people talk about a crashing of the home, the housing market, because it went from a 20% appreciation to a 7.8% appreciation, that's not even a responsible comment. Okay, so when you see the media trying to beat up the housing industry, understand that we're going from a hyper increase of 20% down to this year they're expecting maybe 7%. You know, the people that I pay attention to are maybe saying closer to 5%. So this is a dramatic reduction in the speed at what we were moving forward, but we are still moving forward. Okay, so keep that in mind. And if we were to see a 20% reduction in the price of homes, in the value of homes today, what would we be at? We would be at, in most markets, we would be back to the summer of 2021. Well, the summer of 2021 home prices weren't exactly in the toilet. They were excellent. So keep that in mind whenever you see these statistics coming out. Okay. The other thing, the reason that home loan interest rates are doing really well today is because actually of what happened in Europe. So the European Central Bank, the ECB, made an adjustment to their federal funds rate equivalent. So their group that manages monetary policy, like our Federal Reserve, made a change to their federal funds rate equivalent and increased it by 0.75%, something that we've done here, our Federal Reserve did last time. So the fact that they are being aggressive towards more global inflation is something that our markets are happy about, and we're seeing our bond market really enjoy a good run today and move in the right direction. So the thing you need to watch out for, and the reason I have this up here, the federal funds rate, today our federal funds rate is at 1.75%. Okay, so we were, basically at zero when all this started. We're about 1.5% now. I want to make sure you understand that the Federal Reserve has spoken that they would like to see their target rate is 3.5%. That is double from where we are today. So we are now anticipating more of a 75 basis point increase here on July the 27th. That is 6 days from now. So July 27th, we're expecting an increase of 0.75%. Some people are saying it'll be a full 1 point increase. Probably now they're drifting back down to saying, let's just do a 0.75 we're hearing. But that's going to get us to what? 2.5, right? So they want 3.5. So expect another, I would say another, so if we go 75 basis points here in July, 6 weeks later, expect another 0.5 point increase, and then 6 weeks later, another 0.5, and then maybe a pause. And that's what we really want to see, is we want to see that pause. We want to let the adjustments that the Federal Reserve has been making be absorbed by the economy and allow the results to surface and start to see inflation subside and not have the Federal Reserve go pushing us up to a 5 or 6% federal funds rate and just really cause havoc in the market. So that's what we're taking a look at. Jumping over here to our MBS highway charts, you can see that we actually opened today in a bad situation. I mean, we were down 20 basis points. We were red 20. So you see there's big adjustments here. And now we're up currently 39 on the day on our MBS that we're looking at, which means that we're looking pretty good here. We're getting a little bit better, moving up here again. We kind of really want to see us up at this range here to get us down under the fives without any points. But we've got a couple of ceilings we have to break through, the 50-day moving average and a Fibonacci level here before we push up and hopefully get into this range again. But we like seeing what the ECB did today by increasing their federal funds rate equivalent. So where are we today on our home loan, our Brent Bruce Daily? Let's take a quick look at our scenario. Again, the Brent Bruce Daily is our very well-qualified 30-year fixed conventional home loan. I am going to open up the search parameters here so that everyone can see. This is my compliance, that you see the loan that we are qualifying here and submitting it with my banks that I work with. And who is at the top of the chart right now? United Wholesale. Okay, so yesterday we were at a 5.5, but for $700 on this scenario, we were able to get to 5.375. Today, because of the great run we're having today on our mortgage-backed security market and the response to the ECB increasing their federal funds rate equivalent, we are now able to give you 5.375 with a credit of $619. What would it take to get to 5.25? Let's take a look here. 5.25, man, $900. I mean $600, $605. We're at 5.25. For $900, we're at 5.125. Do you see how this 4.99 is really starting to come back into reach? For only less than a half of a point today, I can give someone a 4.999 interest rate on a conventional 30-year fixed. That is a big difference from where we were previously. So you're seeing how these markets move. Make sure that you pay attention every day to what we have going on, and you're going to begin to learn how the mortgage-backed security market works and how home loan interest rates work. Let me know your thoughts, comments. Make sure that you subscribe, like, and share on the YouTube page, because we are going to be moving away from the BombBomb platform so that more people have access to the Brent Bruce Daily. And I will talk to you again soon. Have a great day. We'll see you